welcome to Finextra. I'm Hannah Wallace, reporting from TCF 2018 in Dublin. Joining me now is Darryl Proctor of Temenos, and we're going to be discussing instant payments and payments in the cloud. Darryl, thank you very much for taking the time to speak with us today.
Thank you for taking the time to speak to me. It's been a fantastic TCF so far.
Yes, it has been amazing. And now we're talking about instant payments. So could you tell me, what do you think is driving the global instant payment schemes?
I believe there's two things that are driving it, and most people think it's regulation, and that's true to a certain extent. There's been a lot of regulations, like in the UK, in Europe, which have said you have to do instant payments and you have to do it by a certain date, which has driven it. But more and more I'm seeing the market drive it. If you look at the US as an example, they are adopting instant payments without any sort of regulation because that's what clients want. Good customer service means instant payments. You have to be able to send and receive a payment in real time. So it's moving more away from the regulation and more towards the market, which is saying, I want instant payments, I want instant gratification. If I send you a payment, you want it right now. And banks are responding.
Mm-hmm. And would you say there's too much focus on retail? What do you think the benefits are of corporate instant payments, for example?
I do think there is too much emphasis on retail, but I also believe that the mass market is generally what has driven technology. Lots of people wanting something means something's going to happen. But what you're seeing more and more now is, if I can do it in my retail life, if I can make a payment in real time as a retail customer, when I get to the office, why can't I do the same in my corporate life? So the corporates are starting to understand this, and there's lots and lots of benefits for corporate. Liquidity, easing of liquidity restrictions, understanding that I can make the payment at the last minute, but I can also receive the payment at the last minute, means it gives corporates a wealth of tools that they can offer their suppliers and their buyers. They can say, I'll give you a discount if I get the payment in real time rather than waiting 3 days or the check is in the post. So it has a lot of benefits for corporates as well as retailers.
All right, and why is having a digital core imperative to service instant payments in the most efficient way?
It's an interesting question, but it's one that I think a lot of banks are not looking at closely enough. Being digital end-to-end, having a digital core means I'm available 24/7, 365 in real time. There are a lot of banks in the world that don't actually achieve this. The way that they achieve it is when their core banking system goes down, they try and mimic balances in another software while that's happening, and you've got to switch and change, and those balances aren't always as real time. When you've got a digital core, when you've got digital real-time payments happening, your balances have to be available on any channel at any time in real time, which means you have to be digital end-to-end to achieve it. You can't try and mask the fact by using switch software or something like that to achieve it. You absolutely have to be end-to-end real-time 24/7, no downtime. And that's what having a digital core instant payments is supposed to be, and that's what Temenos offers.
And finally, in the past, there's been a resistance from banks using cloud-based solutions. Do you think this is changing, and when do you think there's going to be a critical mass?
I do think it's changing. I think the resistance is really two things. It's that shock factor. I'm not in control of my own software or hardware. It's running somewhere else. I can't access it. What am I going to do? Type thing. Where banks are very used to managing their own software, managing their own hardware internally. So it's getting over that barrier. But I think that is changing now. Banks are seeing that actually there's a lot to be gained by running software in the cloud. There's a lot of cost efficiencies. There's a lot of performance efficiencies. A lot of security efficiencies. For example, and that's one of the other barriers, is security. Banks have always thought, well, if I'm not in control, how can I be sure that there's security? Is my data protected? The reality is the cloud providers are spending so much more on security than they do at their own organizations, because they have to make sure that it's secure, or they're never going to get adoption. Is the market changing? Are we seeing more adoption? Absolutely. Is it happening as fast as I think we'd like it to? I think regulators still have a little way to go in terms of looking at cloud and saying, I'm happy to run things in the cloud, but they're seeing the banks wanting it. They're understanding that if a bank is more efficient, it means better liquidity in the market, all of those types of things. So I think regulators themselves are moving towards that direction too.
Darryl, this has been great. Thank you very much.
Thank you so much. Fantastic being here.
And thank you for watching.